Yeah. But normally that camera there for hybrid would log into Zoom, and then if you're home for some reason, you can log into Zoom and then you can see me in the class. And that's basically what we mean by hybrids. Okay, but I'm recording this now just for my fun. Okay, so let's have a look at, the big question is, how has startup technology disrupted these 6 areas? And we're talking about foundation. What foundations are they disrupting? Okay, what you see here are, these are things you see, but I was asking you to write down, what don't we see? What did they take out? Or what did they do that we don't see, but enables that startup to be like the lion and actually to make money and live another day? What is it? I need you to think about that. If you get this, you get a lot of what the whole unit is about. Okay? Who would like to start? Who would like to start? Let's start with capital raising. What have startups done to disrupt capital raising? Foundational, what have they done? Like, of course they're doing crowdfunding, I understand that, but what is that crowdfunding is what you see, but the crowdfunding is disrupting what in the traditional model? What does crowdfunding do? Nicholas?
Raising capital. Raising capital.
Yes. Yeah, but that's not a disruption, because the old model raised capital too. What is crowdfunding replacing in the old model? Capital raising is the objective, but what foundational are they changing? Yes, sir.
Yeah, I think these 2 words can apply to almost all areas, but I believe that these 2 words, simplicity and accessibility, because they are brought.
Sorry, the first word is?
Simplicity,
yeah,
and then accessibility.
Accessibility.
Because, like, yeah, for example, in terms of capital raising, like for crowdfunding, in the past, crowdfunding isn't as easy as it is right now. Right now, all people have to do is just log in their phone or their devices and enter a website, and they can already crowdfund a project or a company.
We'll come back to that during the week, during the semester, because I think it's very, very important that we talk about that, because there's the platform, there's the education, and then there's the marketing that they all have to go through. Those 3 things. And yes, simplicity and accessibility can help the startup get a foothold, but what are they replacing? Like, that's from the point of view of the consumer, that's why they are attracted to the startup product. Correct? All right, so what about foundational? What foundational in the old system?
The exchange of capital raising. Like before it was more equity based, and now it's switched to the incorporation of blockchain. So different boards.
Okay, that's what you see, and the product has changed, but what has been taken out? What are there fewer jobs of? That's another way of saying disruption, right?
Undertakers.
Pardon?
Underwriters.
Underwriters, yes. All right. So what do you call underwriters? Middlemen, yes. All right. So sorry, I'm very simple here. Just middlemen or women, whatever. Please forgive me, but this is the traditional way of. Right. Middleman has been between the lender and the borrower. The middleman, the bank's traditional role, right? All right. So capital raising, right? Startups have taken out the middleman. We don't need the middleman anymore because we're using technology, a crowdfunding platform, and we're able to market and get crowdfunding going. We don't need the middleman, right? The technology becomes the middleman. The platform becomes the middleman, right? The technology and the algorithm in the platform. Am I right? Okay, all right. So that's what foundation has been taken out, and that's why the startup can be different. Right? Startup. This is not the end product. Is not new. You with me here? All right. Someone's got money. Someone needs money. That's been around for a long time. That's not new. You can't say, "Oh, startups have created a new product." They really haven't. All right. They've created a new platform for that product. The platform's been driven by technology rather than people, so they're cutting out the middleman. Now, okay, Neil, you can say that about all of these, but I would submit to you today that this one probably is most relevant to 3 of these, and then, so therefore you need to decide what are the other 2, right? Right? And then we can go into specifics of the 3 remaining. Are you okay with me? We do that? Right? So 2 things we need to do now, all right? I've already hinted that this taking out the middleman applies very, very clearly to 2 other areas too. Which are those 2? Then finally, the remaining 3 areas, what other ways are startups undermining the foundations of the old business model? So let's do with the easy one. Let's do easy first. Okay? What other 2 areas where startups are really upsetting by just taking out the middleman? The foundation. Is my question clear? Is it? All right. Question got it. Number 1, when you're in a class teaching, if the question's not clear, then just put your hand up. Sir, can you speak my language, please? All right. Which you don't go up later. All right. Yeah. You speak my language. All right. So, all right. The question is clear. All right. So then the answer from all of you, hands up if you think it is deposits and lending. Insurance. Payments. Got some hands for payments. Market provisioning. We're talking about taking out the middleman. It's a foundational disruption in that area. Okay. What about investment management? Okay, all right. You're clear on investment management? Okay, you're correct on that one, all right? So middleman, definitely. All right, so investment management. Okay, so we've got 2 out of 6. We're out, time's running out. Okay, come on. Help me here. There's 1 left that I think has been foundational. The startups have taken out the middleman.
It's the P2P lending. P2P lending.
Peer-to-peer. You mean deposits and lending or market provisioning?
Deposit and lending.
Yes. Yes, to a certain degree, but there's probably one that's probably more definite. Remember I said, like, the middleman's everywhere, but I'm just saying there's 3 that are really, wow. The catch is there for the jungle to take home my food for tonight. It's so easy. Boom. All right, as a startup. Okay. So, yes.
Is it payments? Like one of the examples here was emerging payment rails, like personal cryptocurrency, like that's kind of eliminated the bank in a way.
Payments interest rate. Yes, like there's middleman in all of them, but I would submit that payments is much more a consumer transaction driven rather than relying on middlemen as such. So you find a lot of the disruption is using technology at the consumer interface on the payment. But we'll come back to that, Chester. But, because we won't look at payments in we won't look at that. So I appreciate your submission there. Someone else? Anyone else? Who are you? No idea. Okay. Right. Okay, I've lost some of you. So, which is not your fault. I haven't explained what's going on here. Okay. I would say submit market provisioning, definitely another area where it was just so ripe for making money by startups. Because if you look at those three areas, 1, 2, and 3, the middlemen were the traditional institutional banks, the Goldman Sachs, the Morgan Stanleys, the Bear Stearns, the Lehman Brothers. You know what I'm talking about, right? They just had the monopoly on these three areas. You with me here? Right? And like the startups have basically usurped their control of those three areas. And a lot of a good example is, and this is separate from startups, fintech space, a lot of startups now are not necessarily going to IPO because they realise that, we can just get bigger and bigger and bigger and bigger and not worry about IPO because we have much more flexibility about our strategy and reporting and everything. Once we go IPO, suddenly we're under bureaucratic reporting rules all of a sudden. No, we don't want that yet because we need to be agile, we need to be changing our business strategies, changing every quarter, every year. It's so competitive. And I'll start saying, we're not going to do IPO. Google, right? Okay. No, I'm just saying that, the traditional middlemen, right? Like down here, like we talk about crowdfunding, the traditional one, capital raising, IPO, right? You've got to do IPO. But now today that's not front and center, the biggest objective of a startup, often, right? Often for startups, they'll be bought out before they do IPO, a lot of them. Okay? And VCs don't always see the IPO as the last one, as the last area of making money, all right? So the middleman has been very big in these areas here. Investment management, okay? $1 million, you go to a bank, say, can you give me some advice? Sure, no problem. We're so happy you have come and brought your money to me. Let me help you spend your money. Yes, we've got all these products here. By the way, it's 5% if you want to enter into these products, and I get to keep 3% commission for myself. And sorry, Mr. Investment Manager, I can look at all of these funds on the internet. Why do I need your advice? You with me here? All right? That's a middleman. Cut them out, throw them away. Why do I need to pay 300 basis points to someone like that anymore? All right? That's what we mean by the middleman being taken away by startups. You with me here? Yeah? Okay? All right. This is business models. This unit is about startup business models. Your assessment, your big project at the end is about a startup business model. Okay? So I just want to remind you that, yes, it's called Fintech, but in some ways it's very much entrepreneurship that we're talking about. Because we want you to be in the mind of a lion or a lioness. You've got to hunt every day for your food as a startup. You've got to find out, how do we make money? How do we have a sustainable business model in this space? Okay? All right. Very easy in these three. You take out the middleman. All right? You take out the middleman. Okay, we've got 3 left now because time's running out. Let's go through the last 3. By the way, if you haven't watched my videos, then that's okay. All right? So now you can go back and watch the videos on this space, and you'll have a much better it will come back, it will be much clearer for you, okay? So don't be in despair or anything like that. Okay, so let's have a look at, what's another one? All right, deposits and lending. What is the big area? How did startups disrupt this space? And probably the best example, going back 3 decades ago, is what Capital One did. How did Capital One disrupt this space here? Capital One is the largest credit card issuer in the world. Capital One, okay? All right, so it's an example in the video, right? It's important to look at that because Capital One didn't, you know, you think that, oh, fintech startups, they've just been around for the last 5 years. No. There have been startups disrupting this space for a long time. It's just it is everywhere these days. They're disrupting everywhere, every part, because technology is allowing more disruptions to occur. Okay? But Capital One was doing stuff 3 decades ago. That was just like a fintech operation. What were they doing?
Started lending to more.
Yeah, they started lending to students. They started lending to people that a FICO score would say, oh, they don't have a FICO score because they haven't got a job yet. But then Capital One said, but they're a medical student, their future employment income is good to go. But that was never registered on the FICO score. FICO means Fair Isaac Company. It was a company set up to actually score every one of you in terms of your ability to do what? Ability to repay the loan. That's still in existence in the USA today. All right, and then there's Equifax and other institutions in Asia doing the same thing. Today, it's still here today. You get a loan, you go to the bank, you just bought a property, nice Sunway property, new unit just been built across the lake. You go to the bank, and then the bank will go to Equifax or one of these other institutions to find out what is your ability to repay. Okay, that's what happened. That's the traditional model. So they relied on the FICO. So what did startups do? They disrupted this single source of data about your ability to repay. How did they disrupt it? By getting more data on you. For example, how many of you are using Facebook? Hands up. Some of you are. Okay, all right. We could go to your Facebook profile and find out your ability to repay based on, we can actually content analyze the words that you say in your Facebook profile to determine about the extent of agreeableness you are as a personality. And they have found, scientists have found, analytics have found that if you are more agreeable, it's more likely you repay a loan. Wow. Can you imagine that? Like, I didn't ask you to sign anything whether you can give me data on your ability to repay. I just went to your social media to find out about you. That's what startups can do. That's what Capital One did. Capital One didn't have Facebook, but they were looking at you, your demographic, broader than what the FICO score was looking at. The FICO was basically your history of getting loans and repay, loans and repay. So never give a loan to a student because there's no history. You see, FICO says no. Capital One said, no, we're going to disregard that to get more data. And it doesn't matter if some of these students don't repay, because we're getting more data. And when we get more data, then we can use our business analytics. I'm so glad we got our business analytics, all right, to find out and improve our loan lending model. Ah, wow, wow. So that's that one, okay? So that's deposits and lending. What did we disrupt? We disrupted this single established scoring mechanism of your ability to repay by getting other data. And now using social media, using many other types of data. Wow. Wow. Okay? All right. In some ways, you'd say that FICO was a middleman. Okay, but I think this is a really prime example of it's a very special role that has been played in the credit deposits and lending for 1970s, 80s, 90s, 2000s. Okay, all right, let's keep moving because time's running out. That's market provisioning, middlemen. Okay, we've got two left. Insurance and payments. Insurance and payments. Let's go with insurance. Okay, what is the model of insurance? Class, sorry, I'll remind you again. This unit is about the entrepreneurship of finance. Okay? It's about understanding the business models of finance that is enabled by that little thing that you carry around every day, that technology. Okay? All right? So you need to have that entrepreneurial mindset. You need to start thinking, how can we do something here? How can we create a new model? Class, hello. Am I in the entrepreneurship class or is this the 1950s finance class? Which one do you want to be in? Hands up for the entrepreneurship one. Do I have a whoop? Whoop? 1, 2, 3. Ooh. Once more. 1, 2, 3. All right. Okay. Insurance. How do we disrupt insurance? Come on, how do we disrupt insurance? Is insurance about the future or the past? Future. It's the future. Yes. What are we trying to do about the future? We're trying to predict what? The probability of something occurring, an event, right? And then we call that risk. Am I right? Risk is about future or the past? Future. It's the future. So it's the probability of an event occurring in the future and the magnitude of the loss. Two things. That's the insurance model. So once you graduate from business analytics, then you go into actuarial science, right? Why do we do actuarial science? To do all the business analytics on risk. That's what actuarial science does, right? All right, so where's our, there's our insurance here, okay? All right, so we need space for insurance. Okay. Time's running out. Okay, so risk. We are disrupting risk. What do we mean? How do we disrupt risk? Well, risk is the probability. Right? Oh, I've got all the chords except for my own. This is so funny. Okay. Okay. Let's see how it works. Okay, I think we're good. Great. Lovely. So, probability of the event occurring in the future. Probability and the magnitude of the loss, right? Okay, is it big dollar or is it small dollar? So you've got an earthquake, probability of occurring 0.0001%. Magnitude of loss, huge. Okay, or you've got car accident, probability of occurring 1%. Magnitude of loss, smaller. You with me here? That's what risk is all about. All right, so how do we disrupt the insurance, the whole game of quantifying risk? How do we do that? We just get real time data. How do we do that? How do we do that? Like when you get car motor, how many of you drive car? Some of you, good. Do you have insurance? Of course you have to have insurance. You can't, they won't allow you to drive if you don't have insurance. Fine. But what if you don't have any claims in any one year? Do you get a cheaper premium in the following year? Yes or no? You get a no claim bonus, right? Am I right? Yes? Okay. You get no claim bonus. So what does that mean? The insurance company is waiting for a whole year to take place to decide they should give you a cheaper premium. How do they decide that? You did not have an accident that year. You didn't have an accident at all. So we'll give you a no claim bonus. So what are we doing these days? Now you can sign up with some insurance companies that, oh, you agree that you'll have your smartphone on when you're driving your car, so we can track your driving behaviour. If you are agreeable to this, we will give you a 20% discount off your premium. And then, therefore, your behaviour might change, and that will actually reduce the probability of an accident occurring. Ah, are you with me here? So, did the insurance company give you a discount at the beginning or at the end of the year?
Beginning.
At the beginning of the contract or at the end?
Beginning.
At the beginning. Disruption. Disruption. How do they do that? They get in real-time data on your behaviour. The same with health. You sign up with AIA, then you go into Jaya, they give you 10% off your fruit and veggies. Am I right? Same thing, same idea. They get you to use that app. They're using your smartphone to get more information on your behaviour. And if you sign up for AIA Health, this is separate, then they might link that to your exercise behaviour that is tracked by the smartphone. They can do that. So, what's the big idea here? How can they do that? Because they use sensor technology. All right? Anything that detects movement in your smartphone. So what's the disruption here? It's not necessarily the middleman, it's just technology has enabled startups to better quantify and price the risk associated with your behaviour. You with me here? All right. This is the exciting thing about Fintech. All right. This is all about business models. It's all about entrepreneurship. It's about startups, and it's about disrupting the old ways of doing things. All right. So this semester, you need to liven up your senses to what is the model we are disrupting. You come in 1 week. What is the model we're disrupting this week? Understand that model. What is the model we're disrupting next week and the following week? Okay, it's all about models, models, models. We are disrupting, we are changing the way we are able to do that because we have technology that enables us to do that. But we need to have smart minds. Okay? Just because you're a startup doesn't mean that you're going to be disrupting, because some startups have very bad founders and very bad leaders. They just don't know what they're doing. They don't have a clue. All right? So you still need to have a smart mind. The technology is one part, but you need the leadership, the smart minds of the startup that knows the business model, how to use the technology to disrupt the space. And what you're going to learn this semester is that not only that, maybe you have the platform, but you might need to educate your consumers. You might need to educate them, right? And then you've got to do your promotion and marketing. In other words, you need to develop awareness for promotion and marketing, but even after you've got that awareness, now you've got to educate educate them how to best use that platform. So there's other things that we're going to learn this semester. Ah, wow. Oh, have we done everything? Have we done all 6? Huh? Payments. Haven't we done payments yet?
No.
Oh, okay. All right, payments. Quick, time's running out. Okay, payments. What's the big thing in payments? What's the big word? Probably a little bit more complicated. I think the big word is, anyone like to guess? Cash, crypto. Well, that's what you see. But what's the disruption? I think part of it is what you said here, simplicity, accessibility, but it's just, in some ways with payments we're talking about consumer transactions, okay? Like, you know, everyday transaction. That's the big area that we're trying to disrupt with payments, right? Of course, we can talk about house payments and let's pay with Bitcoin and things like that and get titles on the blockchain and all that. Yeah, we'll go into that, but I'm just, the core disruption. There's probably 4 areas of the transactions. Probably I'm departing from my simplicity here, but I just want to, if you go back, when you watch my video, I take you through 4 different developments of the disruption. The first one is just by keeping money away from the bank and away from you, the consumer, like PayPal does. PayPal gets your money if you're using PayPal to collect revenue. They give you the option of paying it to your bank account. It's an option, it's not automatic. And many consumers or people with PayPal account, they just leave the money in PayPal. Like, they don't get interest, but it's just convenient. I'll just leave it there because I'm going to spend it one day anyway. So therefore, PayPal gets to keep dollars. All right, away from the bank. Right. First level of disruption. Second level of disruption is in terms of how many of you have relatives network overseas? Overseas, and you have to do remittances overseas. Is it? Do you do remittances overseas? Send money overseas? Does it cost money? A lot? More than 1%? It costs money. You don't get dollar for dollar when you send to another country. All right. So who gets to keep that? Some clearinghouse. All right. Some platform. You could say it's a middleman. Okay, we're disrupting middleman. Remember, middleman's everywhere, but I'm just saying that that's the second area is on the what did I call it here? Merchant fees, right? Which is middleman fees, but that's sort of one part of payments. The next area, how many of you have, anyone here from mainland China, been to China? Anyone? No one? It's not that bad. Okay, all right, so Alibaba, Alipay, WeChat Pay. Okay, we're starting to use those platforms in Malaysia now, right? But it's been used in China for a long time. All right, so Alibaba, they collect your data and they can use your data for maybe anything in this here to give you a tailored service, to give you a tailored product to suggest for you. So they're using data. So data is the other area of disruption in payments. And then finally, you kept on mentioning it, is the, what did I make a note here? And that is the total disintermediation. That is the middleman. Just, forget about bank, just crypto. We're talking about, it's crypto. I send crypto to you. There's no bank, there's nothing. There's no one in between. The blockchain is our platform. right? We're going to learn more about that next week, but you know a lot about this area. You heard a lot about all the different cryptocurrencies, but these are the probably, I just want, okay, we could say middleman, but it's not, it's a little bit more than a middleman. They're keeping dollars, merchant fees they're cutting out, that's definitely a middleman. They're getting extra data, just like the insurance, and disintermediation is a middleman. Maybe these two elements are middleman related, okay, but not the other two elements. Okay, so that's it. That's how, I'm just trying to think of the foundational areas that how we're disrupting, not just, oh, here's the product. Okay, all right? So when you go back in the current week, this is what you need to do over the next week before next Wednesday. You with me? Okay, you watch the videos, you ask yourself the following question: in what ways in these 6 areas are they being disrupted? And you'll find it. Middleman, the FICO scoring system, using data to better price risk. And here, where the dollars, merchant fees, data, but disintermediation with cryptocurrency. Okay? So just keep that in mind when you go through the videos. The big question: how are we disrupting the traditional finance models? Okay, now let's get you ready for next week. Remember, you have midterm test in week 6 and midterm test in week 10. Dr. Mazet has talked to you about those issues, and we'll talk more as we come closer to that area. Okay, next week, Dr. Mazet has given you some tutorial questions to answer for next week's tube. In addition to that, there is this exercise that you have to do for Friday week workshop. Okay, so not this Friday, the following Friday, there's going to be a Zoom workshop. I'll be running the workshop. And we're going to do some business analytics. What do I mean? Every one of you should choose one country, and you're going to go to a website. I provide the website, for example, something like fintechnews.sg, and you can find the top funded fintechs in Asia for Japan, Taiwan, Indonesia, whatever. You can find all of that. And then you're going to rank the top 10 based on how much funding they got in 2021. That's all. When we come in on Friday, we're going to gather all your data and we're going to put it together, and I'm going to show how we can do simple analytics, put that data together to create a graph and a story about the trend of fintech in Asia from 2019, 2020, 2021. I've already done the last 2 years, and we're going to be doing the 2021 together in the future. So that's what we're going to end up with. This is what we did last year, where we get an idea of what are the dominant, in these 6 areas, remember the 6 areas of disruption? All right, what is dominant in Singapore, Malaysia, and Indonesia? They're different, but notice payments is quite dominant across all countries. But in some countries, deposits and lending, like in Philippines, is bigger than it is in Singapore. Why is that so? You know, you can start to ask questions when you get this data across the countries in Asia. So the big thing that you need to do when you go out of this class, number 1, there's tutorial questions for next week, which are in Moodle. You can go to that. And the second part is to prepare for the workshop next Friday. Okay? And the workshop next Friday will require you to, each one of you is to find, we give you the websites, the top 10 funded startups in a country that you choose. That's all. You just choose one country, you don't have to do or 10.